Welcome everyone, Victus here. I'm a reseller for ProfitTrailer and PT Feeder, an add-on tool for ProfitTrailer. Please see the links at the bottom if you're interested in buying either one of these products and help support me in my efforts to bring you good information. Disclaimer, I'm not a trading professional, so don't rely on my input. It's all opinion. Seek professional advice, please. Today I'm going to be talking about how to be wise with your trading, and I'm going to talk to you over several videos about how to be conservative with an automated trading bot for trading crypto on the internet. And this is true for any bot, but this specifically is going to be about ProfitTrailer and how I do it with that and what I think you should do as well. So let's talk about some of the trading philosophies that I've seen out there. And the first one that I've seen is what I call undisciplined or just bad trading practices. And it's normally what happens when people first get the bot and they download some settings and they don't understand what the settings mean, and they just turn the bot on and let it run. And if the market's going up, if Bitcoin is going up and the market's going up, or the Bitcoin is sideways and the altcoins are increasing, then that can be great. But if the market's going down, then quite possibly you're going to see a whole bunch of coins being purchased by the bot, and you're going to end up with all of your balance being used and holding a whole bunch of coins at a loss, what we call bags. So let's talk about that and what to avoid. What I see people do that is bad is that they use all pairs. So they have all enabled pairs equal all in their settings, in their pairs file. That's bad just out of principle, and I'll talk about that more in a minute. They have their all max cost is 10% of their budget for each purchase, and so that's the setting that you use to tell what each purchase to use. So they have too big of a setting in that. The next thing I see is that they'll have DCA, dollar cost averaging, not being used and no budget for it anyway, or they'll have it turned on and it will buy too quickly and too easily, and it will also burn through the rest of your budget even with just a few coins. So either you've got 25 pairs that you've bought, 25 coins that you bought, and they're all at a loss and you have no DCA, or you're using DCA but you've got it set too loose to where you have 5 coins at a loss, but each one of those has bought 5 times and has burned through your entire balance. So those are bad things, obviously. Another thing I see is that people have really high profit margins, 2 to 4 or 5% as their goal before a coin is sold. And that can work, but typically you have to keep them lower than that. You don't have a max on the trading pairs. There's a setting for max trading pairs, and you don't limit that. So it may have 4 pairs that it's purchased sitting in the pairs log or in the DCA log, or it may have 25 pairs that it's purchased. So typically you want to limit how many you buy at any one time. You don't want to be holding on to too many coins that chew up your balance and stop you from earning a profit at any one time. People think it's good to have a whole bunch of purchases sitting there waiting to sell, but in reality that increases the risk of some of those coins going down in value and being held at a loss and tying up your capital. All right, the next thing is that they don't use the max buy spread, the all max buy spread variable or setting. That needs to be used so that you keep it minimal, so that there's not a lot of spread between the ask and the buy value of your coins. And if you have a really high spread, that means the coin could be dropping very rapidly. You don't want the bot to pick that up. You want it to wait until it's bottomed out. Next is the all min by volume. A lot of people keep this really low, keep it at 100 Bitcoin for the 24-hour volume if you're using Bitcoin as your base trading pair. That's another bad thing to do. You need to keep it at 500, 750, maybe even 1,000 Bitcoin a day on volume, depending on the exchange that you're on. And you're going to have to look at the exchange, and you're going to have to list all the coins and sort them by their daily volume from highest to lowest, and look at the top 20 or 25, and hopefully those are the coins that you're choosing from, and put the volume somewhere in that range. You shouldn't have it below that. So basically, people are buying with those settings. They're buying crap coins, and they get a bunch of very high bags very easily if the market turns bad. When the market does turn bad, you get 100% of your capital sucked into bad purchases, and the bot keeps on buying when the market is tumbling down. So what we want to do is avoid that. All right, so that's undisciplined or bad trading and things to avoid. So let's talk about a couple of other different styles of trading, and then I'm going to give you some advice on how I think you should do it. So micro trading is a style of trading that is using a small or a medium amount of capital, and you're getting in and out very quickly on small fluctuations in the price at the minimum amount of profit to keep your balance ready and available to use for the next transaction. So it requires a sideways or a bull market, and it does require the use of a lot of pairs. So you have to still be very selective there, or you should be very selective there, but you're going to be using a lot of pairs. The frequency of the trades is your goal. You have 200 to 300 trades a day, potentially, and your profit margin would be between 0.6% and 1% is the norm. So it's a very low profit margin. It's not very exciting except for the volume. So it's kind of like selling fast food. It is a high amount of volume at a low profit, and that can turn into a good amount of money. It does require the use of a larger amount of funds per trade in order to make a decent return. It's great if you're getting 0.6% on something and that is $10, but if that 0.6% is 14 cents, then that's difficult to make any money using this style of trade. So you've got to think about having enough balance in there to set your minimum buy cost or your max cost per buy, all max cost, at something that gives you a decent return. But you have to balance that with the risk. If the market goes bad and you don't have safety triggers set, then you could end up with a lot of bags being held. So what that means is if you're not using if you're not using something like Feeder, PT Feeder, which is a tool that you can buy and add on to ProfitTrailer, which watches the market for you and changes your settings, you have to watch a bot that's doing micro trading. And if the market turns down, then you have to go in and adjust your settings so that you don't end up buying poorly. So it's not quite undisciplined trading, but it is something that requires a decent market to be successful. All right. So another style of trading is what I call mid-tier or mid-length trading. It's a little bit higher per trade profit goal, but there are fewer trades made during a day. You usually use fewer higher quality pairs, and you can do this in a sideways market or in a bull or a very strong market. It's a hedge against a down market because you have less involved in each trade, and you have fewer coins held at any one time. So you might, in a mid-trading scenario, have 5, 8 pairs that you are trading at any one time, and you might be going for 2%, 3% trades. So not enough to hold it for a long time. You want to have 10, 15, 20 trades in a day, but it's not going to be the frequency of the micro trading. All right. So the next one is long trading, and this is not something that you see many people doing in a bot or with a bot. It's not a strategy that's being used very often today because of a couple of things. The bots are still fairly immature, and they don't have very strong or very sophisticated trading strategies built into them. They're pretty simple. They're based on gains, or they're based on low BB or high BB. So it's hard to have a long-term strategy for some of these things just because the bots don't do a good job of tracking those. The other reason that people don't do this very often is that most people buy a bot and they want to watch it trade, and they want to do micro trading or midterm trading like I talked a minute ago. And they want to see the action. They want to see the profits every day. They want to see, hey, I made $30, $40, $50 or $100, $200 today. And that makes them feel good. And that can be good, but also you may be missing 20 or 30% gains just because you weren't willing to wait for it. So a long-term trading strategy would be very few coins, 3 to 5 coins. You'd be looking for a long position in those, days or even weeks in those, and your goals for higher profit margin are 10% or more. You'd want to set it up where you had a goal for 10%, 12%, 15%, and then hopefully you'd use a trailing profit to trail that up if it kept going up. The good thing about a long trade is that it's a hedge against a down market or down market losses, because you can set a reasonable stop loss with a bot to protect the downside. Because you are probably seeing long-term gains in the 10% plus range, you can reasonably set a 7% stop loss and have that not impact your overall gains for a 3-month or 6-month period, since you're hopefully going to win more at 10% than you're going to lose at 7%. This requires a lot of patience and isn't very fun, like I said, but really fun is not why we're here. Okay, so in this first few minutes of this video, I have gone over why not to trade like everybody does when they first get a bot, and short-term, midterm, and long-term trading, or micro, mid, and long trading. In the next video, we're going to talk about how I suggest you trade and ways to keep yourself safe as you're doing it. So please join me for the next video. Thanks for watching.